Intro: the reality of trading. Before we begin, I want you to imagine something. You sit in front of your screen, charts open, indicators ready. Everything looks perfect. You take a trade. And within seconds, the market moves against you. Your heart rate increases. Your mind starts racing. Should I exit? Should I wait? Maybe it will come back. This moment, right here. This is where traders are made, or broken. Not in profits. Not in strategies. But in decisions. Because trading is not a game of intelligence. It is a game of discipline under pressure. And in this internship, you are not here just to test a strategy. You are here to train your mind. To behave like a professional trader. So what you're about to learn are not just rules. They are survival principles. And if you follow them strictly, you won't just become a better intern. You will become someone who can survive in the real markets. One trading time discipline: mastering when to act. Let's begin with something that most beginners ignore. Timing. Not entry timing, but session timing. You are allowed to trade only within a defined window. Typically 3 to 4 hours. Now this might sound restrictive. You may think, why limit myself? More time means more opportunity. But in trading, more time often means more mistakes. Markets are not uniform throughout the day. They have personalities. The opening minutes? They are chaotic, aggressive, unpredictable. Imagine a crowded marketplace just opening. Everyone shouting, prices fluctuating. Confusion everywhere. That's the first 5 to 10 minutes of the market. Now imagine you jump into that chaos, trying to make a precise decision. It's not skill, it's luck. And we don't build careers on luck. Let's walk through a real scenario. Market opens. Price spikes upward suddenly. You think breakout? Strong move. You enter a buy. Within seconds, price reverses sharply. Hits your stop loss. What happened? Did the market trick you? No. You entered at the wrong time. Similarly, during major news events, markets behave irrationally. Even the best strategies fail. Why? Because news introduces uncertainty. And uncertainty destroys probability. So your discipline is simple, but powerful. Trade only in your defined session. Avoid the opening chaos. Avoid high-impact news. Avoid random off-session trades. A professional trader does not chase movement. He waits for clarity. 2. Trade frequency: the art of doing less. Now let's talk about something counterintuitive. Taking fewer trades. In this internship, your boundaries are clear. Minimum 2 trades. Maximum 5 trades per day. At first glance, you may feel this is limiting your potential. But let's break this illusion. Imagine 2 traders. Trader A takes 15 trades in a day. Trader B takes only 3 high-quality trades. Who do you think performs better over time? The answer is almost always Trader B. Because every trade carries risk. More trades equals more exposure equals more emotional decisions. Let's go deeper into a real situation. You've already taken 5 trades. You've followed all rules. Now suddenly, a perfect setup appears. Your mind whispers, this is the best trade of the day. Just one more. This is the most dangerous moment. Because it feels justified. But here's the truth. Discipline is tested not when things are unclear, but when breaking rules feels right. So what do? You stop. Even if that trade becomes highly profitable later. You still did the right thing. Because success is not built on individual trades. It is built on consistent behavior. 3. Loss control: protecting your mind. Losses are inevitable. But uncontrolled losses are optional. Here are your rules. 2 consecutive losses, rightward arrow, take a break. 3 total losses, rightward arrow, stop trading for the day. Now let's understand the psychology behind this. After 1 loss, you're slightly disturbed. After 2 losses, your emotional system activates. Your brain shifts from logic to reaction. You stop following your plan and start trying to recover. Let's simulate this. First trade loss. You say, okay, part of the process. Second trade loss. Now you feel discomfort. Third setup appears. It's not strong, but you enter anyway. Why? Because you want to recover. This is revenge trading. And this is where accounts get destroyed. So we interrupt this pattern. We force a break. We reset the mind. Because trading requires clarity. And clarity cannot exist in emotional turbulence. A disciplined trader accepts a bad day so that he can have a good month. 4 strict signal execution, trusting the system. This rule separates amateurs from professionals. You must take trades only when your strategy signals. No guessing. No prediction. No gut feeling. Let's be honest. There will be moments where you feel confident. You'll look at the chart and think, I know where this is going. And sometimes, you'll be right. But that's the trap. Because when you're wrong, you won't be prepared. Your system is designed with logic, testing, and structure. Your emotions are not. Also remember, entering early equals breaking rules. Entering late equals poor risk reward. Precision matters. Professional trading is not exciting. It is repetitive, structured, almost boring. And that's exactly why it works. 5. Risk management, your survival system. Let me say this clearly. A trader without risk management is not a trader. He is a gambler. Every trade must include stop loss, take profit. No exceptions. Let's imagine a dangerous scenario. You enter a trade without stop loss. Price moves against you. You think it will come back. It moves further. Now your loss increases. You freeze. This is how small mistakes become disasters. So we eliminate this risk completely. Also, risk only 0.5% to 1% per trade. Never move stop loss further. Trail only if strategy allows. Think long term. Your goal is not to win big today. Your goal is to stay in the game forever. 6. Trend filter, trading with the market. Markets have direction. And your job is not to fight it. Your logic is simple. You trend rightward arrow only buy. Don't trend rightward arrow only sell. Orange rightward arrow no trade. Now here's where discipline comes in. Sometimes you'll see a sell setup in an uptrend. It may even look strong. But you skip it. Why? Because one rule broken leads to many more. Also, if the trend is unclear, you do nothing. And that takes maturity. Because doing nothing feels uncomfortable. But in trading, doing nothing is often the smartest move. Brain 7. Psychology, the invisible battle. Most trading losses don't come from strategy. They come from emotions. 3 major enemies. FOMO. Revenge. Overconfidence. Let's make this real. FOMO says, if you don't enter now, you'll miss the move. Revenge says, recover your loss immediately. Overconfidence says, you've won 3 trades, you can't lose. Each one sounds convincing. But each one leads to rule breaking. And rule breaking leads to inconsistency. So your job is not to eliminate emotions, but to act independently of them. FINAL power statement, expanded. And now, the most important rule of all. This rule defines whether you succeed, or fail. No rule breaking even if the trade is profitable. Let that sink in. Because this is where most traders get trapped. You take a trade. You break a rule. And still make profit. Your brain rewards you. It says this works. And slowly, you build a habit of breaking rules. Until one day, the same behavior leads to a massive loss. So remember, a profitable mistake is still a mistake. And a disciplined loss is still a success. Because in trading, you are not rewarded for being right. You are rewarded for being consistent. Identity shift. If you follow these rules strictly, day after day, week after week, something changes. You stop reacting. You start executing. You stop guessing. You start following process. And slowly, you transform. From someone who wants to make money, to someone who knows how to trade. And that is the real goal of this internship. Stay disciplined. Stay consistent. And let the process shape your success. This is end of the video. Thank you for watching the video.